evening, all. Ira Epstein of Linn and Associates with your metal market wrap-up for a pretty wild trading day. In fact, a wild week. I'm tired. I need a break. I'm not being funny. I'm tired. This has been a wild week. Today, I had my clients make a trade just to end the month up on a winner. I had them take some money. I'd never do that, but it's been that rough of a month, and you have to deal with that. So in the metal market, I'm looking at what's going on for this Thursday. And first, we did get President Biden to finally sign tonight about a half hour ago, and it's 6:40 right now, the bill to keep the government open through December 2nd or so. Ms. Pelosi does not or has not or maybe won't call a vote tonight. Originally, she wanted to get a vote done on the already passed infrastructure bill out of the Senate. I don't see what kind of horse trading she can do with it. If the House votes to accept that, they have no leverage on the Senate, and you've got two senators there that are very clear. They do not want to spend another $3.5 billion. Simple. So unless you can get something done there, the only leverage the House has, as I see it, is the infrastructure bill. At the same time, it's called taking a pair of guns and shooting yourself in the foot. Because if they don't pass it, you can imagine the Republicans are going to say, oh, we did it, and it's the Democrats there that didn't pass it. I'm telling you, this is a wild, wild event, and it caps a crazy September. But let's deal with the metals. As you know, copper's been, to me, the canary that has caused all this problem. It went down from the 440 level, just got back under 410. You know that China has energy issues, major energy issues, to the point where malls are closing at 4 in the afternoon, to the point where heavy-duty companies have to run mixed shifts, can't work the normal ways that they do. President Xi refuses to have the country go into blackouts. He's made that clear, so everything has to slow down. That isn't bullish the stock market. You're going to have more supply chain issues for a time to come until this energy situation gets fixed. And at the same time, OPEC is now calling a meeting, and they're going to be called on to let loose even more oil. They can turn the spigot on if they want. Did it ever strike you weird that they can produce the oil, yet we in America, we are told we can't produce, we can't frack because we're going green. But here, folks, we'll run to OPEC and their members. Let's buy everything we can get our hands on across the world. Does that sound right to you? There's something not right in this whole thinking to me. But that's just me. Okay, let's go to the chart action. The weekly chart of closes for gold finishes tomorrow. Not today. It's the end of a month today, but not the end of a week. We're up $4 for the week from last week. We still have downside pressure since we're under the 18-week average of closes. So if you filter that, you still have downside bias. When you look at the action, you've been going in a stepping ladder to the downside, and I think I've been pretty accurate in calling that here. Now listen to what I'm telling you. With today's action, this is how you looked coming in. You certainly had lower highs, lower lows after you had a stall period here. Now you've entered another period with today's action of another stall. Why? You broke this pattern. Now you have a higher high and a lower low. So that's the first thing to be concerned about. The second is the resistance comes in at the 18-day average with two other layers, the 100 and the 200-day averages between 1809.90 and 1813.5. The third thing, where did the market keep finding support? The lower Bollinger Band. Yes, it kept breaking on it, but if you take a look at the momentum of the market, you had a market that got itself oversold and started turning to the upside now. I don't think you can be short the market anymore, but I don't think you have any reason to be long. Take a vacation for a moment. When you look at the gold-silver ratio, you can see how the market came all the way back up, made it the highest high that it's recently made, backing off a little bit now because silver went down yesterday $1 an ounce. And as you can see, you've still gotten silver lower highs, lower lows, but the market yesterday got as low as 21.41. Basically, that's the Bollinger Band at 21.40.90. You round and you're right there with the number. And today you got your bounce. It's a bounce. It's not a change of a trend. Do we have an embedded reading here? So you cannot count Thursday. You got to go to Wednesday. Both numbers were under 20. They weren't the day before. No, you have an oversold market that's hit a downside target and getting a bounce. That's how I'm reading it. When I take a look at the copper market, what do you think I was telling clients today to do? Here's the market. It climbed all the way back up to the 18-day average, gave you lower highs, lower lows. You're not embedded. The target is the 411 number. Market falls down right into it. I was getting calls. Ira, what do you think? And I'm going, out, 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 dive, dive. And we'll see what happens. I'm not bullish, but that's where the short should be covering, period. Why? If you've taken my enhanced Bollinger Band course, I teach it. I prove the points to you. Nothing's going to work all the time, but you have to learn where the high percentage bets are. You have to learn where the high percentage plays are. And that's what trading is about. This is, by the way, I am not an in-and-out trader. I don't want to think of myself as that way. I'm certainly not going to be labeled a day trader. I think a swing trader would be the right term. And when you go down to these numbers in a downtrend and you want to fight them, I think that's a sucker play to fight them. Every now and then it'll work. Every now and then you'll get one of these plays. Don't play for them. More times you're going to get these plays. You're going to get down where you can get back into the markets if you want off the bounces. That's up to you. If you're going to trade longer term, why not go to the weekly chart? What are you doing on the daily chart? So I think I can back up what I'm saying, at least in terms of my philosophy. In the platinum market, we're in a downtrend, but the market is just now hugging. That 18-day average doesn't want to do anything. If anyone wanted to go short, and this is what I was telling traders yesterday morning that get my subscriptions for what they want to know exactly what to do. And I am not bashful. I sell here, buy that. This is what I want you to do. I said, nah, how can you sell it at 963.40 and put a stop over the recent high of 996.50? I'm looking for risks on a normal trade that's not embedded. And if you've watched me, you know embedded means you've locked in the momentum of the market. You haven't done that. That are no more than $600. Monetary stops. That's way beyond it. I don't care what it does. The trend is down. The bias is up. You're in the middle of no man's land. And right here, if we take a look at this, both numbers were under 20. I want to go to the day before. Not the day before. That's Monday, September 27th. So Tuesday, both under 20. Both under 20 on Wednesday. This is Thursday. You're embedded now. So now the traders are going to look on the rallies from here to see, can they sell the market if the red line doesn't get over 20? Voila, it's over 20. So long. There is nothing to do. So what I believe in trading is it's not all that complicated. People make it complicated. I have seen people use RSI, MACD, slow stochastics on the same chart. I crack up looking at it. I go, why? Well, they all got to come together. I go, they're all going to fight each other. You're never going to get a decision. I said, for the one time you do, the market's already locked into a trend. If that's your method, best of luck with it. Been around this too long, I guess, 50 years of doing it, and I think I was taught by some of the best there are, period. That does not mean I'm a success, but I wouldn't say I'm a failure. In the dollar index, up and away and riding the upper Bollinger Band when you're embedded. That's a bullish sign. Bullish as can be. And on pullbacks, I expect the pros to be stepping in here and buying this market. So how do I help you with all this becomes the thing. Because if you're like me, here's what you're going to do. Tonight, you're worn out like I am. I'm going to have a glass of wine right after this, and I'm going to bed early. I'll get up as my usual, 4 in the morning. I start reading first. Well, actually, first thing I do is I turn on financial TV, and I want to see what has gone on. I'm always going to turn on Bloomberg, not the individual CNBC. You ask me why. Because I want to see what the markets are doing. We know we don't have the ETF and spiders in the stock in the U.S. Open yet, formally at least. We know it's all the futures, but they're going to tell me what the ETFs are going to do. I want to see that and what they're saying. And I love that the news is on the side there because I can read it. The second thing, I roll out of bed. Believe me, I'm not showering yet. I'll brush the teeth, do everything, go downstairs, have my coffee, and now I start my reading campaign. By 5:40 in the morning, I have read what's going on in Asia, Europe. I know what's going on, or the reports coming out in America, and what events should affect it, and I'm telling you that. Then I start going through both spiders, ETFs, and futures. First, the futures at 5:40 in the morning. I'm covering every one of them, telling you what I see, what I think you should do, giving you the game plan. At 9 o'clock, I start recording for the spiders another 40 charts. They'll all be based on all this plus individual stocks. Yes, I cover ARK, I'll cover Apple, I'll cover Tesla at times. I'm doing Microsoft right now. So I'm playing with them, and I'm giving you the edge on that. The combination of the two is the key. After that, I can have my break, and that's just how it works. After I'm through with all that, I have free time starting at 9:30 until 10:30, and I take advantage of it. I walk away from the markets. At 10:30, I come back to them and I start looking pretty hard. In between, I run a brokerage company. So you look at all this, you're coming up with a game plan. Why not take advantage of it? For $16.90, you're going to get 48 videos in a month. Each 20 minutes long, each well done, each with specific buy here, sell there, do this, here's the reasons for it. And you're going to see losing trades. If you're looking for me to walk on water, I'm not that guy. But you're also going to see winning trades. You're going to see logic and a methodology develop right in front of you as to why I'm putting that out. You might not like it. You might like it. On the weekends, you're going to get the long-term trades because I do all weekly charts. Another 20-minute video on everything again. So give it a try. Go to the website. Under the word research, everything's there. That's all you got to do. Away you go. You got very little to lose and a lot to maybe get an advantage with. I'm Ira. You have a good day.